We had quite the setup in the uranium complex as of our last update, with a couple of our assets breaking through our resistance pivot zone overhead. However, we've been hitting a bit of a speed bump lately. This right here is the Northshore Global Uranium Mining ETF, which is URNM. And you can see that we punched through the pivot promisingly, and then we took a nosedive since then. The other two assets or securities that we are covering are the Global X Uranium ETF, which is URA, and UUUU, which is Energy Fuels Incorporated, or I'll be referring to it as the 4Us from here onwards. But looking at this 50-minute view, we were doing everything right until we broke down through. The rule of the pivot zone, which is this blue box here, is that you must break through the 0.618 resistance and the 0.764 resistance overhead and remain above the 0.618. So we basically broke our rule here. We did not stay above that key support. It's because once you cross the 0.618 and the 0.764 extensions, the 0.618 becomes your support. And that would have ensured that we are not actually in some kind of fifth wave or a B wave in a larger correction. Unfortunately, because the setup has broken to the upside so far, it's looking more like a B wave. So this is probably best classified or best counted as an ABC correction, possibly a flat. So this is kind of how I'm interpreting it at the moment, an A, B, and a C wave. And the pattern is a little off. This could be interpreted as an ending diagonal, which means that we are very likely going to have a deeper second wave. This is, again, URNM specifically. When we look at URA, we didn't quite break through the pivot box. We didn't make it to the 0.764 extension, which is where I had an alert set as marked by the orange dotted line. We didn't hit it, and then we pulled back very sharply. So this also has that same look. And if we take in Fibonacci extension of this 1-2 that we had, the initial 1-2, we almost hit the 1.0 extension. So this too can be classified or counted as an ABC. There is a chance that this is a 1, 2, 3, 4 with the fifth wave extension coming, but it's very unlikely to see that kind of formation in the third of in a third wave. You wouldn't expect to see that. And finally, you have UUUU, or the 4Us. And well, I actually did put this together. We put based on this 1-2, we almost hit the 1.0 extension here as well. So same thing here. So therefore, I'm looking for a lower dip, so possibly a bigger wave 2, which means that this 1-2, while not fully invalidated, is looking less and less likely as time goes on. Now, there is a chance we could turn right around and rally through that box. If that is the case, then I'm an immediate bull again. But until that happens, this complex, the uranium complex, does have a bit more left to prove. Going back to URNM, we did break through the pivot and we broke back down through it. And therefore, again, I am looking for a wave 2, whether it's going to be about the same depth, about $71 as our previous wave 2, or it's going to go a little deeper, is yet to be seen. That was just a little short of the 61.8% retrace, which would put us at about $70. So would not be shocking to see that happen. I had entered a URA call for July 15th for $29. I only held that for about 2 days and I exited as soon as we broke down back through the pivot. So other than that, I never really got into a full position because, again, we didn't see the full setup that I was looking for. Now, what are we expecting in the next few days? Again, possibly or very likely we'll see a lower dip. However, if we do break through this zone, then, well, once a bull gets started in commodities, you can't get in the way or else you'll get run over. So we're going to have to keep our eye on this, keep your eyes peeled. If you've already entered, really depends on your strategy. If you're making short-term trades, might be a good time to unload some of that. If you're holding for the long term, probably better to hold on for a little bit longer. Now, shifting to the bigger picture, things haven't changed. This is USO, which is a different commodity, oil, which I'm watching very closely, which is actually echoing a lot of what we're seeing in the uranium space, in which we presumably we do have a 1-2-1-2 setup in place, just like in uranium. And well, as I mentioned before, even if you catch this a little late, there's still a lot of upside left to go. And if this truly is the start of a bigger third wave, corresponding to this 1-2 that we have in place right now, we have a lot of upside left over the next year, possibly 2 years plus. We did hit a multi-decade low back in March of 2020. So again, the bullish setups remain. There's still a lot of excitement. If we do end up having this lower low, I would see that as a tremendous dip buying opportunity that could be a multi-year bull run coming up. So I'm going to have plenty more content on the uranium complex. Don't forget to subscribe so that you don't miss those. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.